Do you believe buying Tesla stock may make you a millionaire? Many people are persuaded that this is a possibility. Both institutional and retail investors believe Tesla stock is a wise investment. You won't want to miss this recognized Tesla bull, as celebrity investor Cathie Wood has been buying like crazy for months, while other investors have been rushing to sell their shares from the top EV business amid the slump. Star investor Cathie Woods is doing the exact opposite. Cathie Wood swims against the currents to snap up additional Tesla shares for ARK Invest. Despite investor concerns about economic headwinds and competition in the electric vehicle market, Tesla shares have dropped by 65 in the last year. In terms of market share, the EV maker holds 65% of the US market and a staggering 86% of the luxury EV market, according to SP Global Mobility. Despite rising competition in the EV industry, Tesla has shown it can maintain its lead and increase sales in spite of obstacles like inflation and supply chain issues. Additionally, it recently increased its manufacturing capacity with 2 enormous plants that should help it satisfy demand in terms of sales and deliveries. Tesla demonstrated its ability to function under challenging times in the third quarter, reporting remarkable operating profit, cash flow, and revenue. Deliveries increased 40 to over 1.3 million last year, with Tesla's operating margin topping 17%, among the highest in the industry. The electric vehicle manufacturer said yesterday that additional fourth quarter deliveries up 31 of respondents who stated, "There are many causes for optimism. It is entirely understandable why Cathie Woods has been gradually adding to her Tesla holdings over the past few months. This top growth stock has what it takes to rebound and grow in value, which could be great news for Woods' portfolio over the long haul. In fact, the company aims to reach 50 average annual growth in vehicle deliveries over time." Today, Tesla shares trade for 29 times forward earnings estimates compared to more than 80 a year ago. This appears to cause concern for investors today. Star Investor Fund, even though Tesla stock fell multiple times last year, ARK Investment Management continued to place large bets on the electric vehicle maker. In fact, Wood stated in an interview with Yahoo Finance that she still had the utmost confidence in Tesla. This statement came after it was revealed that ARK had met with Mary Barra, the CEO of General Motors. Why does Cathie Wood think that owning Tesla stock can make you a millionaire? Well, she says that if you look at the company's revenue growth over the last 5 years, it has compounded at about 48 annually. She also notes that this growth occurred even during a period when the company was embroiled in many controversies. Furthermore, she says that here in ARK Invest forecast for the next 10 years is in the 50-60 range. While other investors have been selling their Tesla shares due to the company's persistently poor stock market performance, Wood has been buying on the cheap. In October alone, she purchased an additional 190 Tesla shares around mid-October, on top of the over 122,000 shares she had earlier that month. ARK's first purchase in October was made after Tesla reported a missing deliveries in early October, when Tesla announced its delivery and production numbers through a press release, and once again after the stock fell following Tesla's Q3 report. Then in early November, Cathie Wood's ARK Invest loaded up on Tesla shares in its innovation, next generation internet and autonomous technology and robotics ETFs. The company's 3 funds saw a buying opportunity in the automakers' recent slump on Wall Street. ARK's Innovation ETF bought 27,594 shares in the second week of November, while the next-gen internet and autonomous tech and robotics ETFs gained 2,909 shares and 9,173 shares respectively, yet again in mid-December. ARK Invest Woods investment management firm snapped up 74,862 shares of the electric vehicle maker. Across 3 of her exchange-traded funds, according to a daily transaction report sent via email, the purchase was valued at around $11.7 million. The 61,537 shares for the ARK Innovation Fund ARK, the 3,259 shares for the ARK Next Generation Internet ETF ARK, and 10,066 shares for the ARK Autonomous Tech and Robotics ETF ARKQ made up ARK's purchase of Tesla. Within ARK's suite of investment products, Tesla ranks 3rd in terms of holdings, following Zoom Communications, ZM, and Precise Sciences. Wood's buying binge coincides with a challenging month and year for Tesla, as investors grow more concerned that Musk, the company's CEO, is spending more time managing Twitter the social media platform he recently purchased in an early January $44 billion takeover. Even if her flagship fund is being depleted by relentless sell-offs, Cathie Wood plans to start buying more Teslas in 2023. Wood's premiership, even though Tesla is undoubtedly facing many challenges today, Cathie Wood said that the company stock has miles to run and could rise to $1,500 in the next 5 years. She also mentioned price cuts on Tesla's models in an interview with Barron. I think there are people who won't buy his car, she said in an interview with Barron. But if he does what we think he's going to do on the cost side, there are a lot of people who will use economics as their guide. And I think there are a lot more in a video. Would outline the opportunity for investors to keep Tesla shares until 2025 and become millionaires. When asked why she had set a $3,000 price target for Tesla by 2025, she cited a few important factors, of which is the global market share, which is currently in the low 20s, as she claimed, and she thought Tesla would be able to achieve that. She also mentioned that the market share in the US is currently around 60%. It should be noted, however, that ARK's $3,000 price target has since been updated in ARK's updated open source data. Tesla model, in the best case scenario, the price target for Tesla stock is $4,600 in 2026, and it can reach up to more than 20 DK by 2030. The open source valuation model for Tesla has been modified. In 2026, a $4,600 value per share is anticipated for the Tesla model. Bone bear scenarios calibrated to the 75th and 25th percentile of Monte Carlo results, respectively, are roughly $5,800 and $2,900 per share. In reality, Cathie Wood recently estimated Tesla's valuation to reach close to $5 trillion 2026, based on their analysis of consumers' perceived value of time. ARK Invest's updated model shows updated assumptions for the total market for autonomous ride hailing at each price point and the likelihood that Tesla will solve for fully autonomous driving. They anticipate more demand for autonomous ride hailing at higher price points than originally modeled. However, Cathie Wood notes that what we're really interested in are the corner cases, although an unfavorable macroeconomic environment and elevated interest rates drag down the market as a whole. ARK owns about $487 million worth of Tesla, its fifth largest holding. The majority of this holding is in its signature ETF, which has added more than 300,000 shares of Tesla to its portfolio over the last month. Cathie Wood, an investor in companies that engage in disruptive innovation, made millions amid the surge in Tesla and other favorites during the early days of the pandemic before a brutal 2022 sell-off wiped away ARK's gains. Tesla's downfall mostly followed Musk's acquisition of Twitter, during which he invested a significant amount of time and money, much to the dismay of Wall Street. Wood maintained his bullish outlook during last month's predicted drop. By 2027, Tesla's stock would climb by more than 10 times to $1,500. Cathie Wood is confident that Tesla will rank among the most valuable companies one day. So investing in Tesla stock today will make investors millionaires when that happens. Make sure to subscribe to Tesla stock for more updates. Cathie Wood believes that the dip in Tesla stock is a buying opportunity, which is pretty much evident with the way she keeps grabbing up shares whenever the stock hits a record low.